Welcome, everybody. Okay, we're officially recording. This is the Swinging Bull with PB Alerts. There's no companies reporting earnings after the bell today, so I wanted to do something a little different today where anyone can type maybe a favorite ticker or a stock that they've been looking at and that are maybe interested in. So if you post a ticker in the chat, I'm going to pull it up. We're going to look at the fundamentals, the financials. We're going to look at technical analysis. We'll look at the options chain, see if potential trades that might be there. So yeah, all you got to do is type a ticker, a stock symbol in the chat, and I'll be more than happy to do a quick run through of the stock and give you my opinion about it. You might not like my opinion about it, but I'm going to be honest and just let you know what I think about it. So we're about a minute into the stream. Yes, Yolanda, can you hear me on Discord? Let me try something else here. Let me reshare my screen. Okay, can y'all hear me? Okay, good. All right. All green lights on this side. So I'm streaming on YouTube, Twitch, Twitter, X, excuse me, and Kick, and also here in the Discord. Breckle, come on, brother. TK says no sound. Hold on. Mic check 1 2. Okay, well, I'm gonna have to share the YouTube link, I guess. They're saying no sound. Let me switch out my earbud real quick. Okay, obviously someone can hear me. Okay, we're gonna try something else here. Okay. All right, can y'all hear me now? Give me a little feedback on Discord. Can y'all hear me? Okay, everyone's saying yes. So, whoever can't hear me, exit out and come back. This Discord for you. But anyways, okay, spare change on YouTube. Thank you. Says I'm loud and clear. Yeah, so this is just a Discord issue. Just another one of the things we deal with over there. Dave's on Discord, says he can hear me just fine. All right, so it's not me. Anyways, I'm here. I usually do an earnings stream. There's no companies reporting earnings. So give me your favorite tickers. I'll do a deep dive in the company, go through the income statement, quick peek, balance sheet, fundamentals, financials, the option chain, any potential trades. And looks like someone already posted the first one, Dave on Discord. Says coin, into, and JD. All right, try and limit it to one ticker because there might be a lot of requests here. So one ticker each. Dave, I'm going to go with your first one, coin. So I got SPY and QQQ pulled up right now. And who would have thought it would have rallied like this, and institutions, hedge funds, market makers, sometimes they do the opposite of what retail and everyone on social media thinks going to happen. Everyone was all doom and gloom about this government shutdown. And of course, it did happen. But, historically, those things, that kind of thing doesn't really affect the markets much. I mean, sometimes it does. I think the last government shutdown that actually shut down, we get these kind of things come up about a possible shutdown, and then they usually come to an agreement like right before, right? But 7 years ago, I think was the last time that it happened, and I think there was a few days of selling after that, but market rebounded and ended up going higher. But even when we get these little scares about government possibly might shut down. There might be a little volatility, but overall, it really doesn't affect the markets much. And today was a good example. I mean, the government did shut down, and all three major indexes went on to rally. S&P, NASDAQ, and Dow all green on the day. So anyways, that's kind of what happened today. We did trade calls in one of my sessions earlier today in the Discord. We made some money there, $25 profit per contract on that one. So that was a good trade. So we did trade a little bit of the upside today, but I'm going to leave SPY on the left here. Actually, I'm going to go to Webull. Let me go to Webull. I'll go one chart view here because I'm going to get into the first ticker requested by Dave on Discord. So this is Coinbase, of course, and everyone should know who they are. They're obviously in the cryptocurrency industry. And let's just take a look here. So first, we'll go over the fundamentals and financials and just kind of see what kind of shape that the company's in. And right after I go over coin, I'll see who Breckle said SoFi at 403. Spare Change on YouTube said JD at 404. So I'll try and go in order here. So first on coin, they got a positive PE ratio, trailing 12 months, 33.43. The trailing 12-month EPS, 10.36. So those are all nice and positive. Porterhouse is on YouTube. Good to see you, brother. So coin, positive PE, positive EPS, looking good so far. They do not pay a dividend, free float of 210 million. And as far as the financials, their debt to assets only 48%. And if you go to the same time last year from that 48% readout, they were at 97% debt to asset. So a couple of things probably happened there. They either lowered their debt dramatically or they gained in assets a lot, or a mixture of both. Maybe they gained some assets and lowered their debt. And they basically cut their debt to asset percentage in half from 1 year ago. So that's definitely a positive for coin. And obviously there's a reason they're trading up here in the 340s. So good company as far as the balance sheet goes. As far as debt to asset, so far is all we looked at. But cash and equivalents, they're sitting on, as of June 30th, they're sitting on 9.69 billion in cash and equivalents. So nice cash and equivalent position that they have there. And on the income statement, let's take a look at this here. Also on the balance sheet, I like to see property, plant, and equipment. That's kind of like hard assets, like real estate and stuff like that. Nikki's on YouTube. Hey, how you doing? 377 million. All right. Okay, TK saying still no sound. Yeah, I don't know what's up with that. Some people can hear me, some people can't. Just come on over to YouTube, I suppose. And so nice cash and equivalent position. And let me check one more thing real quick. Okay. Let's try this. All right, everyone in the Discord, can you hear me now? Tammy's here. I just switched my setting on the audio settings on Discord. So it should be working now. Anyways, nice cash and equivalent position. Okay, Breckle says he can hear me. All right, it must have been Carrie says no, but how'd you know I was asking if you can't hear me? Maybe you're on YouTube. All right, I'm probably just going to shut down the Discord because this is just getting distracting. So everyone, Porterhouse, please post the YouTube link for me. Because I can't waste my time messing around with Discord over here. All right, I'm gonna exit out of Discord. I can't deal with this while I'm on YouTube. Sorry, y'all. Okay, back to YouTube where everyone can hear me. I just ended that Discord stream. All right, I'm sorry, Discord people, but you know I can't deal with it right now. There's always an issue over there when everyone can hear me loud and clear on YouTube. So obviously Discord setting related, and I'm just not going to deal with it. So cash and equivalent position for coin, 9.69 billion. Okay, that's pretty nice position size. And as far as the income statement, really nice positive net income that they reported in Q2. You can see the year over year numbers are just amazing. And let's see, total revenue kind of up and down, ranges from 1.2 to 2.2 billion. So, you know, it's $1 billion revenue company for sure. But positive net income, so that's good to see. You know, I like the financials and the fundamentals of the company. So let's go on the daily chart and just see what we got here. Okay, look at this setup. Wow, look at all the volume that came in like around the 300s. That's pretty interesting there. So probably around $300 would be solid support for Coinbase. And so, you know, that would be my risk on it. And I mean, what, a little over a 10% risk if it falls below 300 and doesn't recover quickly. So that'd probably be my risk on it moving forward. And as far as profit target, you know, levels, as far as potential resistance or where some supply levels could be, I mean, you can clearly see there's a pretty big gap to fill here. And the top of that gap goes all the way to 377. So that's quite the gap up there. And Private Money says, what was the base again? I'm not sure what you mean by you mean the support. Okay. Yeah, I'm looking at 300. You can see on the volume profile here, it's coming out, sticking out like a little sore thumb. It's right around $300 is where most of the volume came in. And this is price action. This is probably about 10 months of price action. A Private Money guy on YouTube. Good question. Oh, Dave Day here. I know who Dave Day is. You're the one that asked about coin. So the base, you know, my risk on this, I don't like it below 300, you know, as far as like a swing trade would go. Of course, if you're wanting to be like a long-term investor on coin, you know, that really doesn't matter as much because you're just going to dollar cost average in over time, you know. But, you know, I like it above 300. That would be my risk, a little bit more than a 10% risk there. And then resistance or supply level. I mean, number one, we look at this gap here to 370, about 377. I'd probably call it 377 would be the top of that gap. So we go here, 377. So I just put a line there. That would kind of be a level where I would consider taking profit again for like a swing trade. You're doing like a technical analysis, cash grab type thing. That'd be my take profit, or a level you just want to keep in mind that once it gets there, there could be a lot of sellers up there. So maybe it'd be a good level for anyone to kind of start taking some profit, at least locking in some gains. And then, yeah, right around $300, that's going to be, you know, my support level number one. Now, if the gap fills and it breaks through with some momentum, I mean, again, you can kind of zoom out a little bit more, and I'm just kind of looking at volume and stuff like that. But I probably would call a nice mental level of 400. I think that would be a solid mental level, and an additional take profit level or resistance level. So resistance level number one on coin, right around 375. And I can probably go ahead and, yeah, let me just type this out real quick. So I'll say R1. I'll put R1 right here. And R number two, I don't even, hopefully y'all can see that. Let me just type it out real quick, R2. So R1 is going to be this first line here around 375. And then R2, probably around $400 is probably where I would put that. And then support level number one, I like the right around the $300 level. So this would be S1. All right. So those are the levels. Now let's take a look, because it looks like it's in gap territory right now. Specifically the price action that happened today, and you can see this gap over here on the left. So it's already in gap fill territory. So if you were looking for continuation on this and you wanted to know what are some of the possible trades that we could do to maybe take advantage of some of this upside, well, number one, I would, if you're just looking at naked options, when I trade naked options, I usually like at least 3-4 weeks of time on it, sometimes 5 weeks. It just depends. So, and I do prefer being on the monthly cycles, but sometimes we can't always get that. November 1st has 51 days of time. Now it's a $300 stock, so these options are going to be expensive. But let's just say we go out 30 days just to kind of get an idea. You can see the at the money calls. I mean, these things cost, the last sale on that was a little over $2,300. So that's pretty expensive, right? I mean, if you got the bankroll and can afford it, I personally, when I trade naked options, I like to be as close to the money as possible. Better yet, in the money, because when we're in the money, you just get a much better delta. You can see the deltas are a lot higher here. And then also the theta is not as bad. So you get the benefit, being in the money with your call options. If you're trading naked calls, being in the money, you're going to get a benefit of a better delta, and the theta is not as bad. So just a couple things to think about when you're trading options. Now, of course, these cost a few $1,000s, right? Not everyone wants to spend that amount of money. So one way to get around that is what you could do is you could form a debit spread. Okay, it would be a call debit spread. So let's talk about that first. And this is a way to reduce the buying power needed to be able to participate in the options that are at the money or even in the money. They're going to be real expensive, right? If you were bullish on coin and you're looking for this gap fill trade, I suppose you could do some sort of lotto ticket, but to get a cheap option on this, you're going to have to get out of the money by quite a bit. I mean, I'll go 50 strikes out here, but we already know the top of the gap is around 377, right? So even this 380 call, that's still $1,300. I suppose that would be, around half the buying power needed compared to this 350 that's at the money. So yeah, I mean, you could reduce your buying power by half and still get unlimited upside if you went from the 350 strike to the 375. The delta on the 375 is still a 37. So that's good. Okay. When I trade naked options and I'm trading out of the money naked options and I'm trying to just find kind of like a cheap one, I do want to try and keep the delta at a 30 or better. All right. So the 30 delta would be this 390 strike. Outside of a 30 delta, those would probably just be lotto tickets. If I was really bullish bias, I'd be targeting the 30 delta or better. Of course, the higher the delta, the more value the contract will gain as the price goes up. So 30 delta at a minimum, though, that would be a 390 strike. So maybe, and that still costs $1,000. So let's figure out, how do we dramatically reduce our buying power and still be able to participate in the options that are at the money or even in the money? And what we would do would be a call debit spread. So let's just kind of build this out real quick. And I'll go to the expiration date. We're just looking 30 days out here. So October 31st. Breckle says Delta gain. Yeah, there we go. TK says been looking at Meta for earnings on 31st. Yeah, we'll take a look at that as well. I think SoFi is the next one, and then I'll go through the chat and see if we got any other tickers before that. But I'll try and knock out as many as I can. It's already been 20 minutes, but I just want to make sure I explain myself thoroughly so everyone knows like what I'm trying to show everyone here. So October 31st is 30 days out, and we want to participate on the upside, any upside action because of the possible gap fill to 370, right? So what you could do is you could do a bull call spread. All right. That would be the same thing as a call debit spread. It would be a vertical call debit spread. All right. That would be a bullish position. All right. And so Coinbase is trading at $346.17 right now. Now, let me just kind of adjust the strikes up a little bit to 365 to 370. All right. We know the top of the gap is 377. So a trade like this is you are wanting a move out of Coinbase, right? We saw the chart, we plotted out some lines, we got this potential gap to fill right here. We think it's going to go up there and fill the gap. So and we want to participate in the strikes that are a little closer to the money. So what you can do is form a call debit spread. All right. And you can see here, even this one here, if I bought to open the 350 call and sold to open the 355 call. So now we're participating in the strikes, the 350 and the 355. On the option chain, to buy either one of those calls, you're going to need like $2,000 to $2,500. You know, this 350 is selling, I guess the mid price would be around $2,500. And then the 355, the mid price there is around what, $2,300. That's a lot of money to put up for a naked call option with 30 days on it, right? So you're like, shit, how do I participate in the upside and not put up a few $1,000? That's where this trade comes in. It's the slang term is a bull call spread. The technical term is a vertical call debit spread. You're going to buy to open the 350 and sell to open the 355 calls, all on the same trade ticket. All right. When I trade spreads, I normally don't leg into these. You can get a wacky credit doing that. So I do it on the same trade ticket. And once you form this spread, this is a 5-wide spread. All right. So we know for every dollar wide, it's $100 in value. So if it's a 5-wide call spread, we know the total value of this spread is $500, right? Now, this particular call debit spread, to enter this, you can see here, it's going to cost a $200 debit to buy that spread and open it. Well, we know that the max value of the spread is $500. So if we paid $200 to enter this, we know now that our max gain is $300. That's the most we can make on this spread. So yes, it does cap our upside. I understand that. In full disclosure, that's exactly what it's doing. It's capping your upside. But you can still get, you know, a solid return on these. So if you collect $300 in profit, if the spread works out, you also get your $200 initial investment back, right? So if you got $300 in profit and you also get your 200 back, that's 150% return on your capital, on your risk that you had allocated to the trade. So yes, the call debit spread does cap your upside, but you can still get a triple-digit return on your money. So a little bit of a trade-off there. And yes, it caps your upside, but now you only need $200 to trade it instead of needing over $2,000. So do you see how the buying power needed for the trade was reduced by what? Like I'll just say up $2,000, and now it's only going to cost you 200 divided by 2,000. So yeah, it reduced your buying power needed by 90%. So there's a little give and take with these trades, and you have to be okay with it. So to be bullish on coin and to trade options with 30 days of time on it, and if you're going to do naked calls, it's going to cost $2,000 to $2,500, and that's trying to be as close to the money as you can. So what the trade-off is, okay, I don't want to spend $2,000 to $2,500. So Now I only need to spend 200. Okay, that's a plus, but it caps my upside. So yeah, a little bit of a negative, but that's the trade-off because you're only using $200 now. So you have to be able to give and take where, all right, I understand it caps my upside, but it's only going to cost me, it's going to be a 90% discount on the buying power need. I'm only going to need like 10% of what this naked call would cost. So there's the trade-off. I'm willing to take that trade-off because we can still get a triple digit return. So there's an additional positive to that, right? And this call debit spread I just built out, Coinbase really doesn't have to move a lot. Technically, it just needs to be above your break even when we get to expiration, and that's 352. 352 per share would be your break even on this trade. So, I mean, coin was trading at 346 today. So you just need coin to be above 352, and this will be a profitable trade. So that's only what, $6 move? That's not really a big move at all for a $340 stock. So we don't really need the underlying stock to move much. We do need it to make a directional move up, because how these call debit spreads that are out of the money work and how you profit on them, at expiration, is we would need the price of coin to be above our spread. That's how you get the max gain of $300. But even if it's in the top side of our spreads at 355, so yes, it needs to be above 355 to get the max gain, but there's also still a little section of profit between 352 and 355, because 352 would be your break even. So even above 352, you can see there would still be profit there. All right. So I usually just use my break even. If the price of coin is above my break even by expiration, I know there's going to be profit on the table. And better yet, if it's above my entire spread above 355, then boom, I get the max gain of 300. And that's 150% return on the risk that we used, So this would be just a really creative way to reduce the buying power needed to participate in the strikes that are at the money or even in the money. So we get a major reduction on buying power needed. Yes, it caps our upside, but we can still get a triple digit return. This one here pays 150%. So I'm willing to make that trade-off for my upside getting capped, because I know I can still get a triple digit return, and I'd be happy with that. All right. And also these call debit spreads, you don't necessarily need to hold these to expiration every time. My point being, we can scroll down here and I'll go to the table. Okay. And let's look at this table. All right. This is a real neat table here. And again, this is optionstrat.com. This is what I use to it's a really neat tool to build out your spreads. You don't even need a premium account. You can just have a free account, and it's a really good tool to build out your spreads and just to make sure you have them set up correctly. You get your max loss, max gain, what the debit or credit would be, depending on if you're doing a debit spread or a credit spread. You get chance of profit, and it spits out your break even for you automatically. Just a nice handy tool. My point is look at the top of this table. That's the calendar. All right. So this is the month of October. It's tomorrow. The regular session's closed today, so it starts with tomorrow, Thursday, and it goes all the way to our expiration on the 31st here. But look, you don't have to wait till expiration to profit on this. Now, if coin trades sideways, let's say it just trades between 345 and 350 for the next month for whatever reason. I doubt that'll happen, but you never know. If it does trade sideways, then yes, you'll have to let time do its thing, and then just hope you get a 6-point move by the time we get to expiration. So maybe it's trading 345 to 350, and then as we approach expiration, maybe it finally gets those couple extra points, but you can see you'll have max profit at expiration. My point being, though, if coin makes a decent move to the upside this week, maybe next week, my point is, you know, it'll be several weeks before expiration. If it makes a decent move up, you can see the profit that'll be on the table, on this table, no pun intended. So if coin makes a decent move, even into the 360s, and it does it tomorrow, and I mean, let's just say the 350s. I mean, that's only 4 points above where it's at now. It breaks into the 350s, you can start seeing some profit. You see here, if it goes into the 350s, you'll have 10% profit on risk on this spread. It could be tomorrow if coin breaks in the 350s. If coin makes a decent move up into the 360s, look at the profit. Hopefully you can see that. Let me maybe zoom in a little bit. See this table a little better here. So look, if it's in the 360s, you know, you could have, you know, you only put $200 into the debit spread. If this thing breaks into the 360s, you'll have like $60 in profit on the table. And the closer we get to expiration, the more and more profit you'll have, right? But my point is just because it says October 31st for the expiration and it's a spread trade, we don't have to hold these to the 31st if we get a directional move in our favor. I take early profit on these spreads all the time, you know? And even if coin just it go, you know, 15-point move from here and it ends up in the 360s, I mean, do the math on that. If you got $60 profit on the table, and you only put 200 into it, you know, that's a 30% return on your money already. And we're not even anywhere near expiration, right? We still got like three weeks until expiration, you know? So you just got to kind of look at the position and figure out, you know, is this enough profit for me to take early profit? You know, am I happy with this amount of gain based on the amount of days that have gone by and compared to how many days are left until expiration? You just got to kind of get that data together, and that'll help you make the decision on whether you should be taking profit or not. You know, and if Coinbase really goes to the moon and you got to, and you know, let's say we're 2 weeks into the trade, right? And you know, you got like $200 profit on the table, right? You can see here October 17th, it's around like 2 weeks in, or even the 15th, 2 weeks in. And you know, Coinbase makes a decent move to the upside, and you got $200 profit on the table. And once you take profit, you get your 200 back that you initially put in, plus 200 on top of it. So if this had 200 profit on the table, you'd be getting $400 in return, if that makes sense. So you know, if you got $200 in profit on the table and you only put $200 into the trade, that's 100% return on your money, and you're only 2 weeks into the trade. Well, we already know the max profit is 300. So the most you're going to be able to squeeze additionally out of that profit wise is another $100. So you got to think about it. If you got $200 profit on the table, the max profit is 300. You've got 66% of the max gain on the table, and you know, you're only a few weeks into the trade and you have a whole 2 weeks left. So you got more than half of the max gain on the table at the halfway point of the trade. I'm looking at when it expires. It might make sense to go ahead and pocket that profit, because as far as the calendar days go leading up to expiration, you're ahead of the ballgame. If you're at the 50% waypoint as far as time goes of your 4 week trade, and you're at 2 weeks, and you got more than half of the max gain on the table, you're ahead in the race. Right? You're doing better than expected. So it might make sense to go ahead and pocket that and bag it up instead of waiting the other 50% of time for the remaining 34% of profit that would be on there left over, right? So you just got to kind of get that data, and it's really just three things. How much profit is on the table right now? How much time has gone by since I opened the trade? And how much time do we have left until expiration? Once you have those three pieces of data, you can make a solid decision on whether it makes sense to take profit or not. All right. And of course, everyone here on the stream that's in the Discord, if you ever just want me to figure that out for you, I'm more than happy to do that. I'm here in the Discord as support. And if I can just figure it out real quickly for you on what I would do if I was in your shoes. So not financial advice, but obviously this is for education and entertainment purposes. But I'm more than welcome, more than happy to give you my opinion on what I would do if I was in your shoes. Once I have those 3 pieces of data, I'll tell you exactly what I would do. And I don't think I'm wrong, because the value of those 3 pieces of data, it's going to be more mathematically why it makes sense. So it's kind of hard to dispute math, right? And the perfect example is if I have 70% of my max gain on the table and I'm at the halfway point on the trade, it probably makes sense to go ahead and pocket that profit because you're ahead of the game. All right. And then you take all your risk off the table, you got your profit, and then you can reposition. You can pick different strikes if you still want to trade the same ticker, look for opportunities on other stocks. Taking early profit when it makes sense, it really does open the door for many other possibilities for future trades, or just merely adjusting the strikes or the expiration date, and you can stick with the same ticker or go to a new ticker, or just being able to cut that trade loose, and then now you don't have any bias, and you can see the market for what it is instead of being tied to a trade. And that's how you're going to make money quicker over the course of time, is being realizing when it's makes sense to take early profit, which then allows you to get in more trades over the course of a calendar year. And if you're taking profit when it makes sense, which means you're ahead of the game profit wise compared to how much time is left on the till expiration, you're gonna make more money. All right. And I saw someone the other day, they were asking for my advice, and I was very nice to them, but they were in a trade. There was exactly kind of like this. There was 4 weeks of time on it, and within the first week, they had like over 75% of the max gain on the table. This is what they told me. I did a little coaching session with someone the other day, but this is the problem. They waited to get this information from me. So what had happened was they were up 75% of the max gain within the first week on a 4-week trade. What ended up happening? The trade ended up going against them, and it ended up being a red trade. And they were like, why they were kind of beating themselves up. They were like, yeah, I was actually up 75% on this on the first week, and I just figured, I wanted to squeeze that remaining 25% out of it. Like I just really wanted it. But they didn't understand the mindset that you have to kind of put yourself in. And it comes with experience as well. The more often you trade spreads and the more practice and experience you get, you naturally will uncover these metrics as far as like, when do I take early profit and when does it make sense? And the answer to that is, I had to kind of coach them, and I was like, look, you were up 75% on week 1 on a 4-week trade. And that's when I went on to explain why would you wait that remaining 3 whole weeks for that other 25%? It just, for me, it doesn't make sense to do that. And because I have enough experience where I've seen trades be super in the green, and I'm like, oh, I want to squeeze every penny out of this thing, and I wait. And so there's actually 2 things that can happen. Number 1, it could actually go against you, and then that super green trade turns into a red trade. So that's reason number 1. Reason number 2, it just mathematically makes sense. If you're up 75% of your max gain in 1 week on a 4-week trade, you're ahead of the game. You're leading that race. You're beating the law of averages there. And so I usually pocket that and profit and pocket that up. And then now that 4-week trade, it was only 1 week. I got 75% of the max gain. Now I have 3 weeks during that same 4-week time period that I can squeeze in some more trades and do the same thing, kind of rinse and repeat. And, at the end of the month, you're going to be up a lot more money than if you just held that one trade for 4 weeks. So I hope that, I know I kind of rambled on a little bit, but knowing when to take profit, and if it makes sense, it truly is very, very important when it comes to spread trading. All right. Naked options, that's a little different because, there is no max gain on that. It can go to infinity, right? So different management techniques with naked options. But there's some creative ways to lock in profit on naked options as well. For instance, if you have a leap option that's super green, maybe you only have one contract and you're like, but you're super green on it. Of course, if you only have one contract, you can't scale out of it and take partial profit. You'd have to liquidate the whole contract. But a way to kind of start getting reimbursed for the cost of that contract and start bringing income in on using that contract as collateral. And let's just say it's a leap call option that you're super green on. Start selling short-term calls. So you basically be short the call, and then you'd be using your long leap option as collateral to form a call spread. But that way, you're super green on the leap option, and that's a way to start locking in profit. Sell short-term calls against that leap option because you're using that longer dated call as collateral. That's a creative way where if you only have one contract, well, how do I start taking profit without getting rid of this position? Start selling calls against it, short-term calls against it. So this is the kind of things that I teach people in the Discord, is how to kind of get creative with your trades. It's not always a one size fits all. There's a lot of different things we can do when we start getting into multi-leg options, using options as collateral to create contracts for other option contracts and things of that nature. But yeah, geez, I basically just talked about Coinbase for 45 minutes, so I am running out of time. Let me squeeze in one more ticker. I at least got to get two here. So we talked about Coinbase. There is a nice looking potential gap fill on Coin. We got it plotted out on our daily chart right now, and it's in gap fill territory right now. Be careful because it is technically at resistance from when it got rejected last month, about 2 weeks ago. But if it can clear that way, that level, we'll know probably by tomorrow or later this week if we get continuation. But there's still a sizable amount of this gap that needs to be filled. So just got to get over this 351, and I think it's an easy ride to the 370s. Yeah, Porterhouse. Yeah, sometimes I lose track of time when I'm explaining things to everyone, but I just want to make sure I explain everything in detail so everyone really gets the hang of what I'm putting out there. I think there was someone wanted me to look at SoFi. So let me look at that. Spare change says JD. I will look at SoFi real quick. I'll try not to spend as much time as I did on Coin, but SoFi. Okay, let's look at fundamentals first. Nice and positive PE ratio. Bit on the high side, but maybe that's standard in their industry. Everyone has PE ratios that high. We'll have to cross-check that with the peers and competitors and just see where they fall. But EPS positive 0.49. They do not pay a dividend. Excuse me, let me take a sip of water. They do not pay a dividend. They do have a float of 1.16 billion as their free float. Okay. So PE and EPS positive, so that's a good start. They do have positive net income, so that's good to see. This is the quarterly basis. They last reported 97 million positive net income. So that's one thing I like looking for on the income statement. Are they a profitable company or not? If they're not a profitable company, either it's a new company and they just need some years to get to the profitable side. But if they've been around for a while and they're not profitable, be careful with those companies. Usually their debt to assets all out of whack, and they got more debt than asset, and they're just burning cash and money. But SoFi, 5 back-to-back quarters of profitability. On the annual basis, they used to lose a lot of money. So this is kind of like a comeback story type deal for SoFi. You can see dating back to 2020, they were constantly losing, a few $100 million a year. and then boom, just bounce back story here. 2024, they had almost 500 million in positive net income. And I remember wheeling SoFi under $10, to be honest with you. And that's when they started pulling profit on the quarterly, and we kind of started wheeling it after they weren't pulling profit for so long. So I was kind of riding the trend up as they were becoming a better and better company financially. And fast forward, and now they're definitely a profitable company now. So I do like the stock. Assets have been slowly increasing quarter over quarter. That's nice to see. Debt to asset 83%, trending up a little bit, but they still have more assets than debt. The only time the debt to asset would worry me is if that number's over 100%. They're still below that. They're at 83, so that would be fine for me. Just keep an eye on the increasing debt to asset. We'll see what they report next earnings, but and I like to see how much cash they got. Go to income statement for that. Actually, we'll go balance sheet for that. So let's see, cash, 2.12 billion in cash and due from banks. So that's a nice cash position size for stock trading at $25. They got 2 billion sitting there, so that's good. Property, plant, and equipment, almost $500 million. That's solid. I like that. So I do like the company. I used to not like them, and my opinion of them changed after they started proving they can pull a profit. And I even wheeled this one. I only wheel companies that I like. So this I actually made some good money on this. So I like it fundamentally and financially. It's solid. Now, technical analysis wise, you can see they were obviously were downtrending from February to April, but as was almost all stocks, because that's when we had that 20% market correction when that all started when Trump announced his little famous poster board with all the tariffs on it. That's when that downtrend market correction started. But ever since we got out of that, I mean, solid uptrend on SoFi since then. The only thing that's concerning right now is the price is now below my EMAs. I do use the 9 for technical analysis. I like using the 9 and the 21. EMA crossovers is a good signal. You can see back here after the market correction, it's like the first second week of April, this started trading sideways, and then boom, you see the EMA crossover. The 9 crossed to the upside of the 21. That's 100% a bullish signal there. And RSI was above 55 as well, so that's nice. But yeah, it was just kind of off to the races. It did lose the EMAs here and there, but it recovered quickly when it did that. So just looking at previous price action, it's come to the green 21 EMA. This is the daily chart. It's come down there to test quite a few times, but it's always bounced off of it and recovered quickly. And even this candle here is kind of interesting. It breached the EMAs to the downside. Looks like there was plenty of dip buyers. There's probably lots of traders looking at this on the daily chart when it happened. And there were some dip buyers there. And of course, SoFi in the low 20s, that was support before. But my point is within the very same trading day, it recovered the EMA. So that's what I mean by recover quickly. Like if it recovers the same trading day, then you'll probably be okay. All right. So I guess my point is my concern is what's going on right now. We lost the EMAs yesterday. This red candles close at the bottom of the body. So this red candle formed up here. Was still above the EMAs yesterday when the regular session started. The sellers pushed it down. There were some buyers that kind of bought this up a little bit, but sellers just won the battle yesterday. The candle closed right here below the EMA. So this is what I mean. It didn't recover quickly, did it? Like it's been known to do. Like right here, it came down to the EMA, recovered quickly. Even breached the EMA on this day, recovered quickly. I mean, it's a pattern. That's how you know if the bulls are still in charge. Does it recover quickly or not? That's my concern with SoFi right now, as far as like the price action from the past 2 days. And you know, it breached the EMAs to the downside yesterday. It could not recover quickly. Moved into today. It looks like the buyers did push it up a little bit today, but sellers just took control again. And so second day in a row, it's below the EMA. It's a little bit concerning if you're trying to go long on this. If you're already long on this and you have 100 shares or more, 100 share increments, maybe you have a few hundred shares, I don't know, but you would need at least 100 shares. What you could do to hedge the downside a little bit is sell some covered calls. Okay. And I mean, shoot, this $26 covered call for this Friday pays $40. I mean, that's pretty good. I usually put a few weeks at least or a month on my covered calls. Yeah, you know, unless the premium's good, and then you could just get the weekly paychecks. But this is 16 days out. This $26 covered call pays over $125. Well, it pays $125. That was the last sale. That so that's a way to kind of hedge your downside a little bit. It's not going to hedge your entire downside, but hey, it's going to hedge it by how much credit you get. So, this will add $125 downside hedge because you're collecting that credit on the covered call side. Let's say your average was $20 on SoFi, and it's trading at 25. So you're nice and beautifully green on the position. And you want to know, how do I protect these gains? How do I make sure that I don't lose this $5 per share in gains? If you got 100 shares, that's $500 in profit. And you're like, I don't want to get rid of SoFi, but I'm feeling a little iffy about price action lately. How do I go ahead and hedge my entire downside where it's showing I have 500 profit right now? I want to keep just about all that. Well, the way to do that is you're going to sell this $26 covered call and collect $125. That was the last sale. You're then going to take that $125 in credit you received, and you can buy this 25.50 naked put. The premium you collect on your covered call is going to cover the entire cost of that naked put, which means that was a free hedge, basically. That's what that means. So, and just keep in mind, this is a 16-day to expiration. So your downside would be hedged completely below 25.50. You would not participate in any downside. If SoFi sells off to $20 a share, you would not participate in any of the downside below 25.50. And you were able to implement that hedge at no cost. It didn't cost you any extra money to put that in place. So you sell this $26 covered call and use that credit, that income you collect on that covered call to finance this naked put hedge. And that would cap your downside below 25.50, 100%. You would not participate in any downside below that. No, just through intrinsic value alone at the strike price. Now, when you get close to expiration, this is 16 days away. If you want to keep that protection in place, then yes, you'll have to roll that out. But then you're just going to do the same thing. You can go out another 2 weeks and just sell a covered call and use that money to buy the put. So you could just keep rolling it. Or, maybe you're going on vacation with the family. You're going to be gone all month, and you just want to make sure that this position is protected. You don't want to be messing around with charts and stuff while you're on vacation with your family. And you just want to make sure on the day you leave for vacation, and when I get back in 30 days, any profit that I have on the table on any of my positions, I want it to still be there. Well, then you're just going to go 30 days out and do the same thing. Sell the covered call and use that to buy the naked put. Then your downside is hedged, and then you have 30 days of protection. All right, so that's how you're going to protect yourself on these trades. And I know I kind of just rambled on a little bit about hedging, but I specifically did that because SoFi is looking a bit bearish now, isn't it? So if you want to protect existing positions that had profit on it, or maybe you have an existing position and maybe you're sitting at break even, or maybe you're even red a little bit, but you want to cap the bleeding. You want to stop the bleeding. And that trade I just explained, that's what's called the collar trade. So if you ever want to stop the bleeding, or you want to protect profit that's already on the table, any of those two scenarios, or you're going on vacation and you don't want to be bothered with it, but you want to keep everything at where it is on the day you leave for vacation, you don't want nothing to change, all you got to do is put a collar on the trade and you'll be fine. All right, so my opinion about SoFi, I do like the company. This is kind of like a comeback story company where they had trouble pulling profit, a few years back, but now they're on the profitability side of things. And it's just, I love their story. I do like the company. They're SoFi, just read a little bit about it. They're one-stop shop for digital financial services. I mean, that basically sums up, what their company is. And you've seen commercials and ads for them. They give out loans and stuff like that, but you could do it all online. So they're basically in the banking services industry. But nonetheless, I do like the company. I do like what they do. I think, the service and product that they offer is not going away. I think they got some stability there, just kind of in the industry that they're in. On a shorter term looking view, though, I'm just a little concerned about these 3 red candles that just printed. And, you can zoom out on the chart. I'll try and line it up with my volume profile a little bit here. But, it's kind of at a decision-making point, I think, right around the mid-20s, like $25. You could see that's where a lot of the volume has come in. And this is about 3.5 months of price action. So if it loses the mid-20s, it's probably going to be a magnet down to the low 20s, and that's where there's a really good demand level in the low 20s, closer to $20. I would be really interested in actually starting a new position on this. If it did get down to the low 20s again, I'd probably start the wheel strategy on it again. But I just haven't had a chance to repeat the wheel on this, because it really hasn't had any significant pullbacks since we had that market correction. The price has stayed on top of the EMAs and it just uptrended pretty nicely. But now we're getting a solid kind of pullback here. So support level number 1 on SoFi, the mid-20s, just around $25. All right, it doesn't have to be to the penny, but around there. All right, 20 in the mid-20s. If it loses mid-20s, it could be like a magnet down to the low 20s. So that's probably what I would have my eye on, is whether this mid-20s holds. If we start getting some green daily prints after today, well, then that should be a signal that the mid-20s it's support, right? But we got to see what prints tomorrow, and if there's continuation, I'd probably be looking at taking a nibble on this in the low 20s. All right, so that's kind of what I think about SoFi. And as far as the type of trading strategy I would use for this, I like the wheel strategy on SoFi. The premiums are decent. We can make some decent money writing contracts on this stock. I've actually wheeled this before in the past, and it's gone great. And I've made money on it already. So I probably wouldn't mess with any spreads on this. I'd probably just go straight to wheel strategy, because number 1, I don't mind owning the company. I just want to make sure I can get a discount on it compared to where it's trading at today. And that's where cash secured puts come in play, because I'm going to write a cash secured put at a lower strike in an attempt to either collect free passive income or get the stock at a discount from where it was trading at when I wrote the contract. I hope that makes sense. But yeah, it's been about an hour. That's probably all I got for today. Took a really good deep dive on coin. So thanks whoever suggested that. We went over some trade ideas for coin. We went over the financials, some of the financials, some of the fundamentals. Went over some trade ideas. We even looked at some levels on the bigger time frame. Coin has a decent potential gap fill trade into the 370s. That I think anyone could probably trade that. Pretty easy gap fill trade there. Not financial advice, just my opinion. And then we went over SoFi, went over some of the income statements, some of the balance sheet data, EPS, PE ratio, debt to asset, net income, cash and equivalents, any hard assets that they had. And if you were new to doing DD on SoFi, you learned today that this is kind of like a comeback story company where they were having a tough time pulling a profit in the previous years, but now they're on the profitability side of things, and the stock price has reflected that since April. They've been in a solid uptrend. But on the shorter term view, I'd be watching the mid 20s to hold around $25. If around 25 can't hold, then I would just be patient, and I would definitely take a nibble on this in the low 20s. I'd probably start the wheel strategy on it again down there. But yeah, that's really all I got for today. I hope everyone enjoyed the stream. Got a few hundred people tuning in. Good to see everyone. Again, there was no companies really reporting earnings after the bell, so figured today I'd just kind of chat with everyone, hang out, look at a few tickers, let everyone know what I think about them, potential trades, that kind of thing. But if you're interested in joining my coaching program, I think I'm over 90 people now are in my coaching program. So and I teach. This is basically what I teach. A lot of wheel strategy trades. Basically, most of my trades are sell to open. So we focus on writing contracts, and we target weekly and monthly income. So if you're interested in getting coaching on that and learning more about that, join my coaching team. I got over 90 people in there right now, and everyone's making money. Everyone's having a blast. Everyone loves it. So I'm not trying. You can talk to some of the coaching members that are in there now, and they'll tell you things are just going great. And also, to join my coaching group, there's a link right on my screen. Okay, pbalerts.com/coaching/bull. I think there's a hyperlink in the description of the stream, so you can just look at the description and just click on that. But I wanted to mention, if you go to my X account, okay, this is my X account here, and this is my handle. If you go to my X account and send me a DM, I will send you a 20% off code for my coaching group. The coaching groups, I think the full price is only $39 a month. So with that 20% off code, I mean, you're going to be saving a ton of money on that. So follow me on X and send me a DM, and I'll send you a code to get 20% off my coaching. But yeah, other than that, I hope everyone enjoyed, and I hope everyone has a great night. And until next time, I'll see everyone in the next stream. Cheers.